Assalamualaikum to my respected lecturer, Dr. Nur Rahma binti Abdul Majid. My name is Nurin Afrina binti Yan Ajafi and my metric number is S62628. So, in this video, I will explain about leases, which is MFRS 16 for my company, Subur Tiasa. First is initial recognition as a lessee. The group recognizes a right of use asset and lease liability for all lease arrangement in which it is the lessee, except for a low-value asset and short-term lease of 12 months or less. Right of use asset. The group recognizes right of use asset at the commencement date of the lease. The right of use asset is initially valued at cost. Costs include the initial amount of the corresponding lease liability adjusted for any lease payment made on or before the commencement date and initial direct costs incurred less any incentive received. Next, lease liability. The group recognizes a lease liability at the lease commencement date. The lease liability is initially calculated as the present value of the lease payment. They are not paid at the commencement date, discounted at the lease rate. If this rate cannot be determined easily, the group uses its incremental borrowing rate. Next is subsequent measurement as a lessee. Right of use assets subsequently measured at cost plus accumulated depreciation and any impairment losses and adjusted for any remeasurement of the lease liability. The depreciation starts from the commencement date of the lease. The estimated useful life of the right of use asset are determined on the same basis as those property, plant and equipment. Next, lease liability. Subsequently measured at amortized cost using the effective interest method. It is remeasured when there is a change in the future lease payment with the corresponding adjustment made to carrying amount of the right of use asset or recognized in a profit or loss if the carrying amount has been reduced to zero. Next, for lessor, the group have lease burden to their customer under operating leases with rental payable monthly. The lease contains initial non-cancelable period ranging from 2 to 5 years. Subsequent renewals are negotiated separately on a contract-by-contract basis. The group do not require a financial guarantee from the customer. Instead, the group requires 1 to 3 months of advance rental payment from the customer. The lease do not include residual value guarantee and variable lease payment that depend on an index or rate. Next, for low-value asset and short-term lease, the group recognizes the lease payment as an operating expense on a straight-line method over the term of the lease, unless another systematic basis is more representative of the time pattern in which economic benefit from the lease asset are consumed. The table figure 1.1 summarizes the maturity profile of the group liability at the reporting date based on contractual undiscounted repayment obligation. Lease liability and right of use asset will be presented as statement of financial position and lease income will be presented as statement of profit or loss. Based on annual report I have analyzed for Subur Tiasa, earnings per share in 2021 are higher than earnings per share in 2022, which is in 2021 is 38.56 cents and in 2022 is 24.61 cents. The company performance in 2022 has dropped than it was in 2021 based on earnings per share because the EPS value is decreasing in 2022. So, in conclude, I obtained all of the information from the annual report of Subur Tiasa in notes to the financial statement under significant accounting policies. I can verify that Subur Tiasa analysis were comprehensive. Thank you.